So I've got to be honest with you, when I see certain investors, YouTube creators, stock analysts, article writers saying that they are buying a stock, normally I don't pay too much attention. I kind of like to look at what's going on, but I don't really, it's not a big green signal, a big signal saying I need to follow the stock. That's for most people. But when Warren Buffett, the GOAT, buys big into a stock, I listen. It's kind of like when Lionel Messi makes a move to a different football club, you watch what's going on. When Ronaldo moves to Saudi Arabia, you see what's going on. When Warren Buffett buys a stock, you pay attention. This stock that we're talking about is Apple. Apple makes up 46% of his US stock portfolio. So it's a big move. It's not like a 1% move, even a 5% move. What we're going to try answer and get a better view of is it a good stock to buy now? Because Warren Buffett was buying this stock 7 years ago. That's when he first started buying. But what about today? So let's try answer that. Lee, what do you want? Do you want to just get into the business model?
Yes, let me try break down roughly what the business model is. Essentially, I think the easiest way to do it is to break Apple down into two categories. So you've got the goods category, the goods part of their business. So everyone knows this part. This part's pretty obvious. They sell like MacBooks, they sell iPhones, they sell Apple wearables, iPads. We all know what the goods that Apple sell are. This is this is a big part. This is 80% of their revenues. 80% of their revenues comes from goods, but only about 66% of their gross profits come from these goods. So mostly, this is pretty obvious to everyone, I suppose. Like if they're selling a lot of MacBooks, right? They're getting a lot of money from these MacBooks, but it also costs them a lot of money to create it. They have to have factories, they have to have engineers designing these MacBooks. So obviously, even though the revenues are high for these, the expenses are high as well. But then you've got the second part of their business, and this is the really good part of their business. They call it services in their 10K statement. And services, it's basically at the moment, it's basically just App Store. They've got a few other services like Apple TV and stuff, but it's mostly their App Store. And the way the App Store works, if you guys don't know, is if anyone, well, for example, if you pay for an app on the App Store, a small percentage of what you pay goes to Apple. If you make an in-app purchase on any app on an iPhone, a small percentage of that goes to Apple. So this part of their revenues, it only makes up 20% of their revenues, but it makes up 33% of their gross profit. So the expenses for this part of the business is really low, right? They own the network. They own the App Store. They've got all these people using their products. When people make purchases, Apple gets a decent amount of revenue, like a percentage of revenue for those purchases, and they don't do many expenses.
Yeah, I think the strong margins is such an important point because if you make $1, but you're actually keeping the gross margins on their services is 70%. So let's say they make $1, they keep 70 cents of that $1. That's a lot in just profit that they get to keep for themselves. That doesn't go out as expenses. And then if you look at the gross margin on their hardware products, that's 35%. So on $1, they only get 35 cents. So this is a critical area to their business model for shareholders because they keep so much more of the profit with regards to services. And also another nice thing about services is it's more predictable, especially when it comes to reoccurring billing. So let's just give Apple TV as an example. When someone subscribes to Apple TV, they're going to get reoccurring guaranteed money every year, every month. That's a nice thing for some areas of the services section is that sort of guaranteed income. Whereas the annoying thing about the hardware products like the iPhone, the Mac, and everything else, they have to keep selling it.
The other thing about Apple, and this is moving on from what you've said. So the hardware part of the Apple business is very competitive, right? For actually creating the hardware, there's already lots of Chinese manufacturers that create phones with just as good specifications as a lot of what Apple produces. But the thing about Apple, and this is the thing that they've done basically since the start of their company, and this is actually what distinguished them from Microsoft when they started, is Apple have always focused on both software and hardware. And because they do both the software and the hardware, so they make the phones, like they physically make the phones, and they design the software for those phones. So this like leads to a very like smooth user experience. Like when you're using a MacBook, when you're using an iPhone, everything's very smooth. The user interface is really good, and the software and the hardware like seamlessly integrate. Whereas with
Yeah.
Microsoft, when they first started, and they're changing a little bit now, but basically for their entire history, they only did software. So when you used to buy a Windows laptop, it used to be like a Dell laptop or an Acer laptop. It'd be a completely different company making the hardware. And then Microsoft would just design the software to fit onto all these different hardwares, which leads to like kind of a more clunky feel, a more clunky
Yeah.
interface.
Yeah, I actually felt that as a user because I used to be a Windows user and then I switched to Mac. And this was about 3 years ago. And the switch was big for me. Like I was like, Mac is so seamless and easy to use and to move between devices. And it's quick just to turn on and do all the little things. And I've got everything now. I've got the iPhone, I've got the MacBook on it here, I've got the iPad here, and you can even switch things so quickly between each device as well. So that's one of the most important topics when when looking at Apple stock as well is, do they still have their competitive advantage in the hardware products that they sell? That's a very big question. I'm not an expert, but just from a user perspective, it feels like they do. I don't want to switch to any other device or any other brand.
Yeah, I would say in terms of the hardware, they're like the hardware, if we could separate it from the software, that's a very bad business. Like I don't think they could compete with a lot of the Chinese manufacturers and what the Chinese manufacturers can pump out in terms of specs for price, like in terms of how good the hardware is for price. But because Apple have that software, right, integrated so well into the hardware, and their whole software thing is kind of like a network effect almost. It's like they own the app store. They've got all these apps on the app store. So like as a developer, like if I want to create a new app, I'm going to go to the app store, which has all the customers already on it. I'm not going to put it on some random little app store that no one's using. And the same thing for a customer. If I'm a customer, I want to use the app store that has all the apps on it. So there's kind of like this two-way like network effect, which makes Apple's Play Store side of the business, like their software side of the business, really powerful. And I don't think anyone can take away that moat from them.
I guess I'll make some extra points. They got the AirPods that they sell. Great AirPods, great product, works smoothly, just like everything they do. They got the smartwatches, which I personally think is useless, just because I think who needs a watch in the 21st century? However, some people still buy them. They got the Apple TV media streaming thing. It's not that big. They got the HomePod, the speaker, and they got the Vision Pro, which is coming out, the virtual reality headset. So they're kind of going to be competing against Meta or Facebook with regards to that, which will be interesting to see who wins that battle, because Facebook plunked so much, billions and billions of dollars into that area. So I don't know who's going to win that game. Now, the other big talking point with Apple stock is obviously the Warren Buffett correlation. Buffett, as I said, has 46% of his US stock portfolio in Apple. It's his largest stock. It's his largest asset that he owns. And so a lot of people say, oh, well, Buffett buys it, I'm definitely going to buy it. I don't think that is a smart way of viewing things. One key reason is because he was buying this back in 2016. He first started buying Q1 2016, and then he ended in Q3 2018. That's when he did the majority of his big purchases, and he purchased every quarter basically in that period. And the price back then was $25 to $56. Now it's $180. So that is more than triple the maximum price that he bought at. So he was buying at a lot cheaper price. And also, if you just look at the PE ratios back then, he was buying Apple stock when the PE ratio was between 11 and 18. So just on a price to earnings metric, he was buying a lot cheaper as well. Now it's his 30. So you can't just look at the fact that Warren Buffett bought it back in the day and still owns it as a mere reason for buying it. You have to determine the intrinsic value and compare it to the current price.
Yeah, and the other thing to put on that Warren Buffett point, and Warren Buffett always talks about this, is Warren Buffett's universe for stocks is much, much smaller than any of us. Warren Buffett is managing billions, like hundreds of billions of dollars worth of assets. So he can really only choose between like the top, I don't know, like 20 or 30 companies in the US to invest between. He's only got a very small amount of companies he can invest in that's actually going to move the needle on his portfolio. Whereas us, we can really invest in we can invest in like a $50 million market cap company, no problem.
Yeah. So he has to choose the larger stocks which have less potential of getting those big returns, the 10x, 20x returns. Like if Apple 10x, then it would be $28 trillion, which will never happen. So we have that beautiful advantage of investing in the smaller companies that do have the opportunity to 10x, 100x, because they're not constricted by the law of big numbers.
So one thing that you need to look at when you're analyzing a company that's making decent profits is what are they actually doing with those profits and how are they returning the value to stockholders? And normally there's three ways that they can do this. They can like keep investing into the business to grow the size of the business. This is normally what smaller companies do. And then when companies get bigger and they don't have that much to actually put their money in terms of growing the business, then really their two options are issuing dividends or repurchasing, buying back their stock on the market. Because if they buy back their stock, there's less total amount of shares, which means the shares that investors do hold go up in value. So I just wanted to show you this plot from Buffett investors. If we plot net income against repurchase of common stock, both of these are rows in like the income statement and cash flow statement. You can basically see that Apple, since 2012, they're making decent profit and they weren't really repurchasing stock. But since then, almost you can see like these bars are almost equal and opposite. Like almost all net income, positive net income they make, gets sent back out of the business by repurchasing common stock. And I think this has largely contributed to why we've seen Apple's stock price go up so much, like over the last 10 or so years. And so if they keep doing this in the future, what you can expect is the amount of shares on the market to go down, which means the value of each share should go up, provided it's not currently at an overvalued valuation. And then one more thing I just wanted to show is, I haven't shown Tristan this yet, but I wanted to show him this quickly because I added a new feature to Buffett investors. So we can do stuff now. Like if we want to look at, we'll plot net income and total revenues. And what we've added to Buffett investors now, you can add a new line to the chart, which is equal to like one existing line divided by another line. So if we plot net income divided by total revenues, this is if you think about it, net income divided by total revenues is equal to profit margin. So now we can see what's Apple's profit margin over the time. So I'm just going to hide these two series because it looks weird. So you can basically see that since 2005, 2006, which is round about when the iPhone came out, Apple have had pretty steady profit margins at about 22, 23%, that's a pretty good profit margin. And the other thing that's important about it is you see it's like been so stable over the last like 10 or so years. It's a good indicator that the company's not just like going out and increasing random expenses, right? Like the percentage of their revenue that they keep is staying roughly the same. So Tim Cook's managing the company at least reasonably well just by looking at that graph.
Okay, so I've just done 3 calculations for intrinsic value, just so that we can kind of get a feel for what the true value of Apple may be, just with regards to what cash flow are they going to get in the future and how much is that worth to me. So I've done a bull, bear, and normal case scenario. So this is my bear case. I've assumed, so bear case, I'm going to assume that they struggle with their sales, they struggle with their services section and making good profit with that and actually monetizing it. So with the bear case, I've assumed 5% growth, which is 10% lower than their 10-year average, 8-year average of 15%. So it's just assuming that growth slows down a lot. I've done a 7-year forecast. I always want to get a 10% return on my stock. And obviously, if the company is growing by a whole lot less, you're going to sell it for a low PE. Calculate that, and we get a market cap of 1.5 trillion, which is 50% below the current 3 trillion or 2.8 trillion that it's selling for. That's bear case scenario. Normal case, I switched it up a little bit. I did a 10% growth rate. That's still growing by 5% lower than what they have been over the past 8 years. But the reason is it's my normal case because as companies get bigger and bigger, their growth does slow over time. And also we've had a massive bull market over the past 10 years. So we can't assume that the next 10 years is going to be a massive bull market as well. So 10% I think is kind of generous actually. And I've done a terminal PE of 18, which gives it a intrinsic value of 2.5 trillion, just slightly below the current price. And then bull case is that they continue the great growth that they've had over the past 10 years, that the bull market continues and they keep their competitive advantage and they keep selling their iPhones and they keep their customers loving their product. So 15% growth, a nice 25 PE, which the current PE is 30, and we calculate that and it makes them a $4.3 trillion company. So if they do see good growth over the next 7 years, yes, they could become a $4 trillion company, which sounds crazy because it wasn't actually that long ago when the first company broke the 1 trillion mark. I remember that. It was Apple and then like Amazon followed and
2017, roughly, I think.
Yeah, something like that.
Sometime
I remember that. I remember that and it blew everyone's minds. And now Apple broke the 3 trillion mark recently. It's just popped below that now, but it's crazy how big companies are being worth these days.
Yeah. And just to like build on your bull case, I reckon in that bull case, it's probably quite likely that if they did get that sort of future growth rate, it would be from the services side of their business. Because I was looking at like the good side, like the actual increase in iPhone sales and stuff. It's like it's single digit percent, so it's not that high. But the service side of their business, so actually the revenue they're making on the App Store and stuff, that's still like growing roughly what you've got there. So that I reckon is their one chance to keep growing at a decent rate.
Yeah, and some analysts I remember are saying that they can sell more iPhones and their products in Africa. Africa is the one market that they haven't hit yet. But come on, Africa doesn't have the money to move the needle with a stock like Apple. It's just silly. And then you look at like where else do they have to grow? They've already all throughout America. They're all throughout Europe, even Asia. Like a lot of people don't realize that Asians are. I mean, a lot of people do know that the Asians are so onto it with technology. I remember in high school, it was all the Asians that had the iPhones and all of the Apple products. So they're already so saturated in that area. So you're never going to see massive growth in the wealthier countries in the world. So if we do see big growth over the next 10 years, yeah, you're probably right. It's in the services section. Or what about AI? AI is another big thing, but they haven't even made any money with AI. That would be a completely new market that they have to break into, and Tim Cook would have to perform some amazing feats to overcome all the other competition and actually be innovative for big companies. So I don't think they're going to see massive growth with AI. I know that's a new buzzword and everyone thinks it's going to be for some companies, but yeah.
One good thing Apple do have going for them is because they own this network, because they own the Play Store, and as it's like the services part of their business is taking a percent of every sale made on any app that's on an iPhone, they could benefit kind of like from AI, just in the sense that like if there's a bunch of cool AI apps created which are used on iPhones, you know, and they're just like these AI apps are maybe making some sales through their app, or maybe they have a subscription model, Apple get a percent of that. So really, like, yeah, if the amount of transaction value on iPhones can keep going up, people can just keep spending more buying apps or app subscriptions or whatever, Apple will benefit. But yeah, it's kind of indirect. It's not like they've got like an amazing AI technology themselves.